Life is beautiful, oh, the things in the dark gonna get what you do, and burn and leave you. Life is beautiful, oh. Yeah, I know that doesn't get broadcast now on YouTube, or in the recast, which is strange, it used to work. Anyways, that was the introduction to Forex.Today. Life is great, life is grand, life is good, life is beautiful, even when all your trades get knocked out at break even. Yeah, it's one of those days. Ugh. Yeah. And snow. So, I've had one of those days. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose, especially on the Canadian dollar. Tonight, Brandon says, I didn't know it snowed in Georgia. Yeah, everybody in Georgia didn't know either. Yeah, it snows maybe every 4 years, and so it happened twice. Funny thing is, I mentioned a day or two ago, I have a large construction crew out here doing some pretty intensive work, right? So just a day or two ago, I'm in the backyard. It's beautiful. It's warm. I'm smoking a cigar, hanging out with the lead. And now it's like it's 2 or 3 inches of snow. I mean, it's snow. It's snow on the roof, snow on the ground. Snow. There's no snow. I just took a picture and showed people before the webinar. It's outside my window. Let's see. Look at that thing. There you go. Like snow. Like that's snow. There's real snow. But that was all grass just yesterday. The Grand Tour. Yeah, I don't even know what that is. Sounds nice though. Yeah. So anyways, it's not supposed to snow. Yeah, there's snow. I'm looking on the other side of the lake too. Snow everywhere. So whatever. Don't risk money you cannot afford to lose. There's some volatility coming in the next few hours. Hi, my name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com. Thank you for being here this morning. I appreciate you. I am honored by the loyalty and respect that you show me every day. So, namaste. I'm here to help you with technical and fundamental analysis with hopes or blood, sweat, and tears for years. You become a successful, disciplined, independent thinking currency trader or money manager. That's my goal for you. So I'm here every single day, Monday through Friday, except for the one day a month I'm over at FX Street, where I've been hosting Trade Non-Farm Payrolls live for about 12 years, and it is their most popular webinar, attended by well over 1,000 people. So anyways, good to have you. I am going to now go. Ryan's like, never mind. Well, yeah, in regards to the TV show idea that I came up with, I've talked to CNBC and they're interested, but more meetings have to happen. And I also talked to Fox. They'll do it. They'll broadcast it throughout the Middle East and Europe to begin with. But I need to find my own sponsors, and I'm like, well, I want you to pay for it, so whatever. I'm like, you know what? I don't want to make a job out of it. It's just a hobby. If you want to do it, tell me. I can make it happen. But if you need to make a deal out of this, then piss off. So anyways, we'll see what happens. Let me move that over here. Yeah, sickening work ethic, yeah. Whatever. So that's what I told him. All right, so let's get going. The most important thing today is the Bank of Canada interest rate decision. We got a beige book. That's a good read. Definitely be overshadowed by the Bank of Canada. Okay. What do you think of the CPI out of the Eurozone? Interesting, but not enough to get us through some resistance, right? So it's like it's kind of all baked in. Kind of baked in. And then this tonight, you got the Aussie decision, and then the Chinese industrial production, retail sales, GDP. I mean, it's a great trading day, right? So we're doing in the New York session. We got the Canadian news. In the Asian session, we got double doozy, dipsy, Aussie and China news. Great, very good. So it's a good trading day. That's all I'm saying, right? So trade your Aussie, trade your CAD. Didn't we talk about trading commodity currencies? Sure did. I just want to point out that I did upload yesterday's video and Friday's video. I apologize. I just thought I did. Guess I didn't. Thought I did. It must have been a Friday, right? So anyways, there I am in my crimson. And no, that's not Alabama. See, I get to wear that around here. There's so many Alabama fans and there's so many Georgia fans, and nobody cares about Georgia Tech. So I walk around and everybody thinks I'm an Alabama fan. They're like, he's wearing crimson. He must be from Alabama. I'm like, do I look like I'm from Alabama? Did you ever grow up my life? Anyways, not a lot of Harvard fans. But then again, there's not a lot of Harvard students. So anyways. All right, so yesterday I took, what, 5 swing trades on Monday, Tuesday-ish, or whatever. And then yesterday, I think it was yesterday, we moved the stop to break even. It might have been the day before yesterday, but we moved the stops to break even because of perceived kind of risk building up on this short and trading week. And yeah, so I got knocked out of break even on, well, pretty much everything. That's been my day. How's your day been? So if you go around the world, here's the pound dollar. Didn't do anything. But is this a double top forming? That's your call. Okay? Remember, you need to decide, or should have already decided a long time ago. Are you a buyer of the pound or a seller of the pound? Or even specifically, are you a buyer of the pound dollar or are you a seller of the pound dollar? And then you figure things out and you say, well, where do you feel comfortable buying? Where do you feel comfortable selling? I'm not really an R1 seller, even though it's resistance. That seems to me a resistance zone in an uptrend. So to me, it's out of my zone. It's not where I feel comfortable if I'm a bear. If I'm a bull, it's pretty easy. You're supposed to buy a retracement back to the moving averages. And remember, they're moving averages. So like a hunter, you shoot in front of the EMA. So as a bear, you can identify resistance and say, well, maybe here, but I don't like it. It's better after a double top, right? So to do this on a 1 hour, once you get the double top, then you can try to set it up fib-wise. And you got this going for you, right? And this whole zone so your stop would be above here, and protecting you, right? You have the double top pattern, you have the 786, you got the WR1. All of this is sort of your zone of hope. Zone of hope, 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 right? But you don't have to like it, it's just a trade. And you say, well, I don't really like the R1, it's not really where I wanted to sell, I don't like selling uptrends, right? That kind of stuff. But a lower high after double top, I'll take a shot, and you're risking this kind of stuff. Does that make sense? Now, a bull Monday morning should have felt like this was overbought and was preparing to buy a retracement, right? And remember, in that situation, buying outside the swing zone, you use the moving average or roll reversal as your entry. So if you're a bull, you're probably not that excited about the buy because you're buying it overbought, but it's up, so that's going to happen. And if you're a bear, you're not that excited either because you're like, well, and only maybe after the double top. Up here, no way, and HELL. I'm not supposed to swear. My daughter yells at me, Dad! I'm like, hell's not a swear word. It's like saying Fresno or Bakersfield. What's the difference? Same neighbors. Well, Lester, you're not going to always see a one-for-one. There's macroeconomics in play, right? So look at it more as a trend than a data point. Right? So anyway, so that's that. Now, here's the euro. Here's like why you don't just short the R1 simply because it's resistance. Well, you're on the wrong side of the trend, right? It's an uptrend, so you shouldn't be in the business of selling in an uptrend. Double top off weekly R1, off weekly WM4. WM4 better than just a double top at WR1, like the pound, right? So now you kind of got this play going. So now you have to ask yourself how you want to set that up. I guess I'll just use my drawing tool. It's easier. It's temporary, but easier. So now you're asking yourself, how are you going to play it, right? That would be the most ideal. Okay? You're bending the 21. So you see how it's flattening? What does that mean? It means the MACD was rising, the MACD was rising, the MACD was rising, and right around here, the MACD crossed down. Still bullish, right, above the waterline, but now heading down, and you see that in here. This is the MACD, okay? So we're flattening out, and that's not very bullish. Okay. So if I was thinking about selling into an uptrend, if I sold a head and shoulders and lost money, at least I could talk to the judge and jury, right? Judge and jury, throw myself at the mercy of the court and said, look, I know it was an uptrend, but I'm bearish on the euro. I want to see, and then I saw a head and shoulders pattern, which is a reversal pattern at the weekly targets with the, the crown on the M4. It was worth a shot. I'm like, okay, that's understandable. I mean, that's the right way to lose money. Okay? Remember, what's more ideal is buying in uptrends, not selling reversals of uptrends, right? So, and to go back to last week's conversation, we really put this one into detail. Okay, I identified this area as the one place a bull would buy. And if you were a bear, you'd be thinking about this, and you'd be thinking about this. But we had this conversation when we were at this zone, not before it went up, or not after it went up, before it went up. You guys remember that? Brendan says, yeah. Yeah, Brendan, when I draw an arrow that says that, yeah, you would, that's where you'd look for your entry. Yeah. So, yeah, so in this case, if you're a bull, you made money. Why? Because you did your job. And that's it. That's all there is to it. Right? If you're having a mental breakdown with your trading, it's just because you didn't make the easy decisions. You're trying to do everything difficult. If you'd just been a bull on euro, or a bear on US dollar, or ideally both, I mean, that is such an easy entry. And I told you then, when we were there, like, it's such an easy entry that there is no other buy zone. There isn't anything else to do. It's so straightforward, right? Right? Do you remember that conversation? I'm like, there is no other buy zone. That's it. What the hell would you be looking for? Right? Or like, and look, it went up. Well, of course it went up. Yeah. Right? Okay. Right. So, and then if you're a bear, I'm like, look, you don't sell there, even though it's fallen for a day and a half. So, there's only two places to sell. Here, it might fall. I have it highlighted still. And you can see somebody took the shot. It was right. That was the correct thing. Up here was the other one. Blew right through that. Why? Because it's bullish. Right? Because we're in an uptrend. So this was a difficult trade. This was, I don't think you even got an entry, but you might have, and then lost quickly. That's fine. And then, what are you doing now? Selling R1, selling M4? I mean, it's a tough life, right? It's a hard knock life, isn't it? Selling an uptrend? And what if you are selling the uptrend? Don't you have to have a talk with yourself? Why am I selling something that everyone else in the world seems to be buying? Right? When you just say, I'm a bear and I'm not, but let's just say it, right? Well, let me ask you, do you know that I'm a bull on euro dollar? Right? You know that? I'm not just making it up now because it's going up. I mean, and for a very long time, right? Okay, good. But let's say I was a bear. Okay? Shouldn't you at least say, I'm a bear, but these are not the market conditions that look favorable to me? Like, There's more to being a trader than just selling at every level of resistance, right? As a bear, most people don't even say they're a bear or a bull. They're just blindly trading. Okay, let's get past that. Let's say you're a bear. Isn't there more to just selling every level of resistance on the way up? If you were managing millions of dollars, tens of millions, hundreds of millions, wouldn't you say, well, look, I'm a bear on this, but this is not the market conditions in which I'd like to dump millions of dollars. It just doesn't feel like I'm going to make money or easy money. It should be painless and easy, right? So shouldn't you just say, well, you know, maybe it's an off month. And you'll wait. Right? Remember, your bad months should be like 0. Not negative 30%, right? Your bad month should be like negative 1%. Your bad month might be plus 1%, but not negative 30, minus 30%. You're like, no, January was off, so I lost 30%. You're like, ooh. Right? So a bad month should be market conditions were not favorable for our strategy. Fundamentals were off. The market was irrationally rallying, and we waited and we set things up, and we didn't get a shot, so we didn't trade and we didn't lose any money. Yeah, but Kareem, lots of people feel comfortable with that, right? It's easy to replace that if it's $500, but what if it was 500 million? You're like, oh, I'll just pop in another 500 million and we're good. Top it up. Well, what if you can't top it up? Like, 500 million is a lot. I can't just say it was a bad day and top it up and, you know, all right, let's be reasonable. 3 million. Yeah. Buy some Bitcoin at 15,000. It's going to go to 30 before visiting 10. So, anyways, so I think I made my point. But if you are looking to sell it, wouldn't at least a head and shoulders be appropriate? Okay. And if you miss this move, are you going to have a conversation with yourself about that? We talked about it, set it up, soaks, everything looks good, monthly central pivot. I mean, that's a clear shot, right? Okay. And how about taking profit at M4? That's a reasonable place to have taken profit, isn't it? Let me get rid of, we don't care about this anymore. Isn't this a pretty normal place to take profit? And if that happens on a Tuesday or a Wednesday, what is your general expectation? What could happen? It's not even probably, but what could happen? Yes, thank you, swing traders. Back to the central, which you see is a role reversal, right? So let's say it just did this, and then did this. Right? Now we're into this role reversal. Then it could go back up as a bull, right? And the interesting thing is you take the peak of the crown to the neckline, right? And you extend that from the neckline down, and it predicts a move to there. Let's see, maybe I have this. Yeah, it's a little off, right? Neckline is there, right? Wick, 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 wick. Okay? Wick, 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 wick. Go to the neckline now, and it predicts a move there. Wicked awesome, isn't it? Yeah, Joe, we'll get around to Aussie yen. So now what? Remember, I think it was yesterday, I drew the bottom double blue lines to say we're at support. Remember, this one was resistance. This is where a bear would sell. Remember the 3A2 kind of role reversal idea, using the weekly pivots as a top? That's, that's sellable. And then we're down here yesterday, and I'm like, well, it's not sellable now. The only thing you got here, if you do want to sell it, because the news coming up later today, you better kick off a moving average or something above us. Trying to get one for you. I mean, all of it's pretty rough. I mean, that's the only one you got, right? So I got to zoom in now. You're going to play the 21, and you're going to play it rolling over here on the Stokes. That's the only thing I see that you have is selling the 21. You're a bit late on that already. And then hope it breaks the double bottom. And see, at least in this situation, if you're being aggressive and you're selling the 21 and you're fairly near support, I mean, you might measure support down here, so you might not feel, right, that you're that close. You might feel the weekly support is more appropriate, right? You might have it like this might be the way that you're measuring it. Okay? So then you got room, you sell it off to 21, you're bullish on CAD, bearish on US dollar, and you're gambling now, like we were talking about pound dollar, euro dollar. I'm like, well, you're selling into an uptrend. In this case, you're selling into a downtrend. Which one are you going to most likely get more lucky on? I'd say betting on the trend. If you were being aggressive, go with the flow. Is all I'm saying. Be a cork in the river of Forex is something that I've said for generations of trading, now, right? So if you had to be a bear, you would use the 4-hour 21, and there really isn't anything else. And you're really playing the volatility that will come out of the CAD news. So you're assuming the Bank of Canada is going to be hawkish. You're assuming maybe even a rate hike, but more importantly, the expectation of future rate hikes. Okay, because if a rate hike is expected, it's already been priced in the bond market. So that's a done deal. If you expect it to go up and everyone else expects it to go up, you could see it in the futures market, or in the, I should say, in the money market, right? In the loanable funds market. Uh-oh, don't go ivory tower. But in the low, right? So you'll see that priced in. What wouldn't be priced in is future rate hikes that are just sort of assumed out of what happens today. Okay. Brian says we don't want it done. So a lot of newer traders will see a central bank raising interest rates, and of course they read the silly little books, and the silly little books say the central bank raised interest rates, so the currency is going to go up in value. It will appreciate. And they raise the interest rate, and the currency tanks. And what will happen is you'll find that, yeah, they did raise interest rates, but they said in a statement that they probably won't, in whatever language it is, that they probably won't do it again, or it'll be quite some time. And that's the disconnect, because they were already priced, the market would normally price in future rate hikes, and anyone that gambled on the raise now and continue raising methodology would say, uh-oh, I'm overly aggressive, I'm overly optimistic, I'm I'm overweighted, I'm overexposed to these future rate hikes, which may not now happen, so you got to get out. And the currency falls, doesn't rise, right? So you got to be careful. Yeah. Well, also, like, another thing to think about, Ryan, because he's talked about the last FOMC and stuff. Think about the role that a reserve currency plays. And you'll see, like, the general lessons taught about central banking policy and currency appreciation and stuff is generally every other currency in the world is not the reserve currency. So imagine the United States is doing fantastic, but the rest of the world is not. Well, the rest of the world uses dollars. So it's sort of, what do you, right? So if they're not using them for transactions, there's no need to flood the market with dollars, right? Because it's the dollars moving around. So if there's lots of dollars globally, the dollar's going to be weak. The market will be flooded with all these dollars. And then when things are bad, it's the opposite, right? The dollar's in demand so that everyone can park their money in the United States. So there's just, it's different for every other country in the world because every other country in the world, their debt is in some foreign currency. In the United States, their debt is in dollars. Their debt to other people are in dollars. So when things are good, you weaken the dollar and they're like, hey, I'll pay back the loans cheap with cheap money. So whatever, it's the next layer of thought, right? The dollar isn't just a dollar like the Canadian dollar. It's the reserve currency. So if I don't know what, Indonesia sells oil to Japan, it's in dollars. All right. Let's look at this. All right, see what I'm doing here. This is naked trading because I literally did this when I was in the shower this morning. So in every sense of the word, this was naked trading. That's how I roll, bro. Move, brawl. So I see a double top in a reversal zone or profit zone for bulls, which could be a reversal zone for bears. Okay, I got the reaction that I was looking for off of the top in the zone I would want or even expect that to happen. Bruv. It's like brother if you have a list. Yeah, I get it. Yeah, but there's a lot of ways of saying it, right? But anyways, I like the Leonardo DiCaprio way. That's all I'm saying. Yeah, and he says brew. I don't think he says brew. He says brew. And Leo, he's going to get it right every time. Yeah. What do you mean? Of course, blood diamond. Gee whiz. Ryan. Yeah. They should have did Brad Pitt. They should have put Brad Pitt in that movie. He's the master of accents. So anyways, so now I got my double top. I get the respect I'm looking for. And then I fib it. And like I said, I was in the shower, so I sold here at the 382. So it's 618 on me. I could have waited a little longer, but like I said, I was naked. Right, and I don't make good choices with my pants off. So, yeah, typical man. So, yeah, so anyways, I'm at 382. I might lose money on this, but, you know, I sold it, double top, you know, 1, 2, 3, at in a pivot profit reversal zone, right? Isn't that what we're supposed to be doing? Double tops with 1, 2, 3s. So we'll see if it works out. Right. So the question, and these big ones are hard to get. You know, Alan is struggling with the trend trading. Well, sometimes it's like the time of day you're trading. So, you know, very often, if I start mentoring people, very often I'll ask simple questions like, what time of day do you actually sit down and trade? And the answer is typically, I sit down and trade the worst time of day. You know, after everything's happened, then I want to buy. You know, it could be something as simple as that. But often it's, you know, you're trying to make decisions after the fact, where it's better just to flip a coin. And I've given this advice a lot, right? You flip a coin, and you're a bull or a bear for the next 3 months based on the coin flip. So therefore, you know if you're buying at support or selling at resistance, but you also can identify and say, if I'm a bull, is this market bullish? If the answer is yes, proceed to the next step. Look for support, in which you may consider buying, right? So I don't know how often you are defining a trend. Also, are you watching the trend on a 4-hour? Daily? 15 minutes, you know, all these different things. So I kind of got this 618 retracement thing going. It might roll over, it might not, but I'm picking really smart places to lose money. I'm picking smart situations to lose money, because that's what risk is, right? You might lose money, but there might be a payoff. So I'm looking at a lot of things going in the market, and then looking for patterns, and then, right? So you may look at this as a bear. Like I look at this as a bear. Now I know this is pretty iffy. We know this particular week we may not get the trend, but we knew that 6 months ago, right? But if I am a bear, isn't this where I would take a shot? So I'm taking a shot and hoping the trend continues. But you might also say this is a bullish trend. And that's where the market, you see, the market doesn't always disagree. The market is so big, so many people, it's like the bulls and bears can both be right at the same time. This could be bullish for a bull, and this could be bearish for a bear. What I mean by that is, like, look in the situation here, and I think we talked about this, didn't we? Like the potential double bottom. I got out somewhere before this rally, didn't I? I forget what it was. Well, I think it was this green candle here knocked me out, right? But anyways, can you see how if a bull was a bull could have bought this, right? And now we're in a situation where if a bear was a bear can start looking for the reversal to re-enter. But it'd be a different time frame, it'd be a different time zone. What's something of this? So kind of maybe in the beginning, right? So like, is this an uptrend or a downtrend? We could disagree on answering that for sure, right? Isn't this amazing? Look at this. And this double top is where we started talking about a drop, right? Isn't this where we started selling? Isn't that nifty? No, not quite actually. I think it was more like this one, wasn't it? The lower low, lower high. Right? Double top, lower low, lower high. Roll reversal, right? I think it was more like that. Oh, Jefferson, first of all, you don't really have to get all that excited about Turkish lira yen. I was just trying to string together a thought process of one central bank decision leads to a change in a different central bank, right? So now I went from the Fed to the euro, and then if the euro recovers, what economies are next in line? Because the eurozone is the eurozone. So now to analyze, to get to the opinion on the ECB, you have to analyze like the German economy, the French economy, the Spanish economy, Italian economy, that kind of stuff, right? And you develop an opinion there and how the ECB is going to react to that, and then how the change in policy at the ECB is going to then affect things outside the eurozone, which is then the tertiary play of Turkey. But it could be other things, right? Okay, so don't get hung up on the whole Turkish lira thing. The next answer to that, like, how do you get your lot size? As small as possible. Okay? Absolutely as small as possible. And if it's a good trend that's going to last a long time, when the first trade is, so let's talk about it going up now, right? This is just an uptrend, right? One mini lot. One, right? Get that profitable. Second mini lot. Get that profitable. Third mini lot, get that profitable. Fourth mini lot, get that profitable. Fifth mini lot, get that profitable. Sixth, and just build and pyramid. Each time remove risk, re-enter. See, you can do that in Forex. You cannot do that in the stock market, for example. Right? Your stock is up 20%. Can you buy a little more with that 20%? No. You don't get the 20% until you sell it. In Forex, you can trade the 20% or whatever. So if your profit is above break even, right, then you can add a little more. And then that gets above break even. Then you can add a little more, and then that gets above break even. Take that profit, add some more. Pretty soon, you've only risked the original mini lot, but you might have 6 or 7 mini lots, right? And you still have 100% available margin because you keep trading the profit in real time. It's beautiful. It's one of the best things about Forex is that your profit and loss is floating in real time. Okay. The only problem with that move is you have to pay, so you wouldn't want to do it on. You don't want to buy USD Turkish lira long term, but you could sell it. long term. So anyways, we'll see what happens with that trade. If I lose, I won't lose a lot, right? That's the whole idea. If I win, I'll just keep winning. Peso, not much has happened in the last 24 hours. Right? Same old story. We sold up here. I took profit here. So this whole move, unexpected. I guess it could have held a little longer. What are you going to do? Right? What are you going to do, huh? I was righter than I thought. Oh well, try again next month. So anyways, same kind of story everywhere. How about we'll take a look at WTI. So somebody drew a line that said down to here. We're mostly there now. But we are caught on double cluster of pivots. So it'll be interesting to see what happens today. See ya, Jota. Adios, I should say. I guess we'll look at some yens. Yen. There's no yen like no yen like no yen. I know. Boo. I don't think I shorted this one, did I? Yeah, and then it was a really piss poor risk management then. Look at our buddy here. There's no freak out zone there, huh? All right, poor risk management on my part. Moved it too early. Maybe with the... Oh, I know, because this false rally could have continued, right? Yeah. And I sold it because it was a decent entry, but I didn't like selling it and all that. Yeah, I mean, look, if there's risk, I don't want the risk. I want the easy money. But how do you get the easy life? By trading like a stress case, right? No, I want the easy money. So that was a little risky. I guess so. Right? I can always get in again later. But isn't that interesting? Stokes says, don't worry about it, huh? Cool. Well, there's your little move. Yeah, I could see it. Like, this is a little more than a 618 and all this, but remember 6, 7, 8 months ago we talked about this being the false rally week. So that could be the end of the false rally. I mean, this could be the sell and hold for 4 months, right? So it was a shame. I might have to try to find a way to tiptoe back into that later today. Pound. Oh yeah, I'm still on the pound. I guess I just forgot to mismanage my trade. Don't you love that? I forgot to mismanage my trade. Good. So anyways, I don't know what to do. So because I didn't screw this one up yet by making a mistake, I'm still in it. So it still seems reasonable. Remember, I'm not in love with it. You don't have to love all your trades. What did, WWWD, what did Wayne do? He sold at the monthly pivot. It's just a swing trade, right? Oh, by the way, the swing trading stuff. So, as soon as we started talking about the swing trading stuff, doing like a weekly thing and then doing a little more hands-on education and updating videos, as soon as we started talking about that, what, 3 weeks ago or something, there was an update, screwed everything up. I can't even log in now. You guys can't log in. All of a sudden, I can't log in and stuff. So it just compounded. All of a sudden, there's like 10,000 problems. 10,000. So I've hired someone. They're working on it. So the idea is very, very soon, maybe today or tomorrow, you'll be able to access those videos again on FX Bootcamp. But it's just one of these things like, there's an update and it screws other things because then they need to do an update and then it really messed it up. So like right, so it needs some tweaking in the back end database stuff. I'm not a programmer, so I can't fix things at the front ends now. So long story short, it's not a problem. It's being fixed. It's delayed. It took longer than it should have and all that. I understand, but I thank you for your patience. Some people are trying to get in and redo the swing trading course and stuff like that. So we're working on it. I do want to do the swing thing with you guys. You know, at least a 3-month kind of thing, right? So that we can swing trade together, that kind of stuff, and they will offer, along with sort of updated video training courses and stuff, we'll offer live hand-holding to help you implement what you've learned in the video. So it's a super upgrade at a perfect time because the site's crashed, so it needs an upgrade. So I'm hoping by like February 1st or even earlier, if you want those things, it'll be available to you. So if you need, if you need a live community at the London Open, if you need a live community at the New York Open, that will be made available to you, along with all the videos. And if you need a live community for the weekly and monthly swings that happen really for me Sunday night, we can do that together as well. Yeah, it's just going to be super outrageously expensive. And it's only for super outrageously focused, determined traders that are serious, like quadruple bypass surgery, along with brain surgery. That's serious. Sound all right? Yeah. Cool. So that's pound. So that's the update on that. I apologize. Okay. Hit our target. I don't trade this. Not under these circumstances. And it's double bottoming. The only thing I want to point out is on the first day of the month, on J1, which is way back here. Okay, let's do a vertical on this. J1 is here, approximately. Okay, so how do you trade? Speaking about the swing trading course. Okay, if you're a bear, by the way, let's preface all of this. Was it possible for you or anybody, let's say, but now let's talk about you. Is it possible for you to have been bullish on the Japanese yen starting January 1st? Not bullish on the yen pair, on just the Japanese yen. Could you just say, January 1st, I'm looking to buy the Japanese yen? Was there any technical reason to do it? So it was because you had some sort of alpha. Alpha means your ability to outsmart the market, and the market is beta. Okay? So the market was heavily net short Japanese yen, right? And you can look at commitment to traders report and all that kind of stuff. You can look at the direction of euro yen, pound yen, right? That kind of stuff, right? The market, the beta, was heavily short Japanese yen. So all of a sudden on January 1st, you're like, yeah, I want to buy it all back now. And we did talk about it a day, a week, a month, and even a year in advance, right? So it's just like, it's your alpha. Nothing here on the charts would tell you to do it, right? Okay, great. So we're just picking this pair now. So if you were bear, where would you swing? What's the perfect entry to sell, to implement your alpha? If you sat down and wrote a strategy down on paper, oh my God, okay? So you would say on January 1st, 2018, based on what I taught you in the swing trading course, you would say, I would like to sell here. Right? No, Stone, that would be incorrect. Okay. And your target would be here. Okay. For the month of January. Is this 100% accurate or not 100% accurate? I mean, it has to be 100. Is this something you could have thought of 6 months in advance? It's a yes or no question. That you knew this price would lead to this outcome. Cool. Now, I don't trade this pair, so I shorted euro yen, I shorted pound yen, I shorted CAD yen, I shorted Aussie yen, I shorted Kiwi yen, and I nailed them all. I didn't do this one, sorry. My bad. What are you going to do? I was tired. I'm old. Look at me. I used to be pretty. Now I'm pretty old. Yeah, actually, I'm having a good day. Look at that. All right. Anyways. Look at that. You want to know how poor I was when I grew up? I was having dinner with my mother at Christmas, and she's like, she leans over and she's like, you got a stain on your shirt. I'm like, what? She's like, right here. I'm like, oh my God. That's the Ralph Lauren pony. It's a logo, Mom. Oh. That's how poor I grew up. Never seen one before. Like, what? Mom, didn't you buy me a whole bunch of Ralph Lauren clothes when I was a baby? Oh, wait, that's right. Yeah. But anyways, no, the true story, I swear to God. It was great. I'm like, yeah. No, it's not an ink stain, Mom. No. It's polo? Yeah. Yeah, just imagine, right? My head just exploded like, holy crap. Oh, never heard of it. Yeah, never heard of it. Oh, must be nice. Looks good on you. Thank you, Mom. All right. Hang on, I gotta get this. It's probably related to my work crew. Hang on. What? They're not coming? The crew's not coming because of the snow? Oh. Yeah, look at this one. Let's see if I can get a better picture now. The sun is up. Can't quite see the water though. Maybe like that. Yeah. Yeah. Yeah, a little better. Beautiful snowy day. The lake was frozen a couple of weeks ago. Anyways, end of civilization. Yeah. I'm like, come on, they're all Mexicans. They love the snow in Mexico. Come on, get them up on the roof. Anyways. Yeah, I wouldn't want to be on a roof with 2 inches of snow and ice. The peak of my roof is 4.5 stories tall. It's like, it takes you 2 minutes to hit the ground. So anyways. Yeah, I'm like, come on. So look, another situation like, it's not a beautiful setup, right? You see this? It's not a great setup on the monthlies. It's mediocre on the weeklies. Just not a lot going on in the moment. You see what I'm talking about? Just like not excited. So, you know, I think I had 1 or 2 on this, didn't I? I did, didn't I? And got knocked out on the pullback. So I think I was short. Oh, I was short last week here. And then probably, I mean, I can tell you just by looking. Yeah, I think I shorted this. And I was short last week, so I lost a couple. I don't know when I jammed or where I jammed my stop, but whatever. Not in those anymore. And look at even my pig is going bad. My beast. Kiwi. Oh yeah, we talked about this one. Yeah. Remember that? Look at that. You remember? Everything in the second triangle didn't exist at the time. All we had was the low, the prior low, and the high. So I drew the triangle into the future and then highlighted it with the orange trend line. That's pretty good, no? Can I pat myself on the shoulder for that? I mean, that's cool, right? Like, watch yesterday's video. I drew this into the future. None of these candles from this point existed yet. Isn't that neat? I bet you too, if you took the average price from here to here, you would get that pivot. So if that's impressive, then watch yesterday's video. Oh, what I'm saying, Ryan, is if you're doing analysis or something, if you looked at this area and this area, added up all the prices and divided by the number of candles, you'd probably get something like that pivot, which was your target anyways. So I don't know if you would have taken profit here or here or here or whatnot, but it's all on the long run. Yeah, it was good. I don't know. So is there a psych level? I don't know what was playing there. It was probably a monthly pivot or a daily pivot or something else is going there. It wasn't weekly. It wasn't monthly. So whatever. It's just bouncing around 80. But cool, right? At least the logic is there. And I don't know if this is a Gartley pattern. I don't know if this is a butterfly, a bat. It's none of that to me. It's a potential reversal. So here's what it is to me. Let's see if I can break this down into digestible pieces. This whole area here in the X, this whole area, is an area in which I would expect a reversal pattern. That's it. We knew that last week. That's where you would expect a reversal pattern. Cool. So I wake up in the morning and I go outside and I take a deep breath. Yeah. So then I go into my weekly analysis and I say, yeah, somewhere around here, I would like to see a reversal pattern at that price, that specific price. Okay, cool. Then I get a lower low, which says, oh, I'm not the only one on this planet. Okay. No, don't get caught on the triangle. Get it caught in the logic. I just drew a triangle to make it visually important or obvious. So don't look for triangles now. No. Yeah, we got to get you past pure technical analysis because none of this is predictable otherwise. You also have to remember, let's go even further back. 6 months ago, we were looking for this pair to head down, right? So whatever. So anyway, so we're looking for reversal patterns, right? Monday morning, we look at the market and say, well, up here would be perfect. So that's part of your analysis. And then you say, well, so you can just sell there or put a working order to say, if you go up there, sell. All this is your judgment call. It's fine. But let's say you're ultra conservative, right? You're ridiculously conservative. Well, once you get the lower low, now you have a situation of a 1, 2, 3 pattern kicking off the high, off the top. So in that situation, you do two things. You can drag this across and say that is your sell zone. That's out of the price action course on FX Bootcamp, right? That's just straight up price action. The other way you could do it is fib, and you'll see like 3A2, 50%, 618. Okay, and you would sell. Okay, but that's just simple trading. So it worked out really well. You can see that we predicted it yesterday, and it happened today. Well, that would have been your job, right? That's what your job would be to sell these things. Now, there's also a weekly central, so it kicked off the M3, then it kicked off the weekly. If you're trading it based on a weekly swing, your target is way down here, basically 79.62. Okay. Now, the problem that's occurring is right here. There's a giant psychological number, 80. 80.0000. And that's enough to screw up even the best setup. Human beings, for some reason, react emotionally to certain numbers, and that's why we call them psychological levels. And 80 is way more important than 79,000 or 71,000. Why? I don't know. 80.0000. It's just a bigger number psychologically. So this whole thing could collapse. But like, this could have been your trade plan yesterday, right? If you're doing just day trading, right? And you're like, well, because I set this up. You're like, yeah, I'm looking for that. So you could say, this is a 618 of this move, and now you're getting this, and then there should be another. Your call, okay? You see left? So somebody made a comment, they're like, hey, dairy prices were great. How come the kiwi fell? Did it fall? Could have bought it off support. Could have bought it near 80. And you might be long as long as you want to be long. Okay? So Katie, going back to your comment, I would like you to be fundamentally bullish or bearish for any nonsense reason. I don't care what it is, but something that makes sense to you. And you could be completely wrong. It's fine, right? We all suffer this thing. You're going to have confirmation bias. You're going to be wrong, all this kind of stuff. But you should still trade your strategy even if it's wrong. Because it'll at least prevent you from losing a lot of money, because you'll know you're wrong because you're not getting entries, or as soon as you enter it collapses, you're not getting any big wins, all that kind of stuff. So once you have that, you know your price levels of where you're interested in buying and selling. And then based on that, if you happen to see a reversal pattern, like I'm drawing this, and I happen to want to sell this anyways, it's much more believable. I'm going to take the shot. I'm going to feel pretty confident. And all these things are important, right? Remember, feeling confident is a big part of what we need to succeed. So I'm like, well, I'm bearish, and there's my price, and I could sell this, and then it's going to come down, make the lower low, so I'm going to sell here. So you sell again off the weekly and sell here. I mean, you could have had two beautiful trades, and you're very confident, right? And then now you know it's collapsing, so you're like, well, I gotta get out, maybe look to re-enter. But at least you know what you're doing in advance. What I don't want you to do is start looking, like just randomly looking for patterns, because you're going to find them, and they'll be wrong. Okay? Because you're not supposed to be looking for patterns. You're going to find candlestick patterns and triangles and wedges and flags and bats and butterflies, but that's not what the world needs. Right? Even the scumbags at AutoChartist can provide you something to do that. Doesn't make you a good trader. What makes you a good trader is making the decision of where these things are supposed to go. Then use technical analysis to identify market conditions favorable to your strategy and price levels favorable to your strategy. And the rest is nonsense. So it's late in the day. So beautiful outside. Look at that. Lake's all sparkly, gorgeous. So anyways, I gotta go. I was thinking of, well, first of all, I got to get the program we're working on, FX Bootcamp. And I thought I'd start doing like videos on growth and GDP and then inflation, all that kind of stuff, and just kind of bump up the fundy scores. My kids are home, so I'll just lounge, put my slippers on, make a Forex video. So, peace on earth. Yeah, I know what it. Yeah, just send me another reminder, Ryan, and I'll do that thing. But yeah, but the problem is, you know, really, in the past, in situations like that, I'm like, no, I can't do it because it sets me up for. It doesn't look good, but I'll do it anyways. But yeah. But whatever. All right. See you guys. Peace on earth. May the pips be with you. May your profits be above average. Thank you for being a client of TradersWay. Huh? TradersWay, 30 diamonds in the sky. Ooh, ooh. It should be like that. See you tomorrow, guys. Beep. Beep. You guys want to do some jazz for a while? Okay. Oh, yeah. All right. We'll see. Yeah. Okay. I will just stop the recording then. Beep.